Art Collins here. I show biases and make arguments for trading systems. I'm not selling the systems, not in these tutorials anyway. So I have no skin in the game over whether you follow them or not. I'm just showing tendencies and then giving you my take on what the tendencies are. Okay, so today, the tendency that I want to focus on isn't on any system per se, but rather on the year 2020. It's a very unique year, to say the least. And what we have seen in system performance, as we're just passing the three-quarter mark, just adds to the uniqueness of the year. Because we're getting performance summaries that are peculiar to this year. Therefore, again, without telling you to do anything or not do anything, I'm personally toying with the idea of trading systems developed exclusively off 2020 data. I can hear heads exploding across trading mechanical system trading experts everywhere. And it's risky. And I'm going to just go into a little bit about what I think a person could do to mitigate the risk, to keep it on a low burn, and also why I'm just kind of attracted to this idea. All right. So, basic classic systems are performing especially well this year. Some systems that have just been so-so for a long time, some that have gone completely out of favor and are back. They include a wide array of system types, a lot of different types of engines that make a positive numbers game. Take this basic one, okay? It's an intraday system where you buy the highest high of the number always varies. Richard Dennis used to use 20 and then 25. This is a 4-day one. Okay? You're long here and you sell here, which is the lowest low of the last 4 days. On a stop, you hold the trade perpetually. You get a quick signal, take a quick loss because you're buying this 4-day high here. And you hold it. This one lasts longer, and it turns out to be a winner when the market finally goes to the low of the 4-day low. You sell short there. So these are on stops, perpetual system. You tend to get kind of choppy action for a while, and then you get your big runaway trade. That's the idea of it. So in the S&Ps, it's done very well this year. On this system, 2020 is not the best year, but as you can see, it's among the best. And it's kind of interesting that we've seen sort of a sustained resurgence of this idea. For the last 3 years, it's been doing well. But again, we're seeing similar stuff from all different approaches. If you've been watching my videos, you know that a very simple idea of trading on 5-minute bars and buying at 8:35, the end of the first 5-minute bar, if you are above the daily 8:30 open, or selling short if that 5-minute bar closes below the 8:30 open, is about as simple a system as you can get. If you did nothing else but get out on the 3:15 p.m. regular session close, this is the historic results you'd get before slippage commission. And again, this time you see kind of a breakaway year, 2020. Mean reversion combo. This is how my partner and I made 800% over 10 years. You don't have any potential buy setups, get long setups, until your close is under a next day close. In this case, we're going to use 5. You're looking to be a buyer if you're below the 5-day average close, but you don't enter until you get a move in your intended direction off of the daily open. So in this case, 50% of an average 3-day range above the opening price. Again, we're going to make a perpetual system out of this one. You stay in until you get a reverse. Now, why aren't I showing you the usual rules and stuff? Again, I'm not touting systems. I'm just giving you the idea that 2020 is especially good. And I believe I recently gave you a system where you would be buying on 5-minute bars as they moved lower and selling as they moved higher. 30% off respective opens of the average 3-bar range. Sort of a mega system. Well, this is the kind of system that's really gone nuts in 2020. Again, I'm not showing you systems per se, so I'm not going to get into slippage commission, but trust me on this. If you had just magically been starting to follow at the beginning of 2020, you would have surpassed any conceivable slippage commission barrier you might have applied to it. So the question is, if you were to do something like this, if you were to create a system exclusively or largely off 2020 data, how would you avoid getting caught when the uniqueness of the year ends and we go back to normal? Well, it's gonna key off ranges. The thing that makes 2020 uniqueness is the large range sizes, the volatility we're seeing. The average S&P futures day session range from 2010 through 2019 was 19 points. But in 2020, that was bumped up to an amazing 57 points. So you can set a threshold for an average range size that it has to continue to be above for you to continue trading the system. Stop trading it when it goes below it. We're going to be talking arbitrary here? Yes, we are. But at least we're not going to be talking improvising on a gut level. You're just going to find something that is not going to be the sweetest spot that you could have come up with, but it's going to be good enough. Hopefully you'll be locking in profits and getting out, again, not at the best possible time, but good enough time to lock in profits, say thank you very much 2020, and move on to something else. So for setting a threshold like that, there are 3 considerations. You got to keep in mind, what is the threshold price you're going to set? And is it going to just be strictly today's range fell under it, or is it going to be an average range for the last X number of days? And also, are we just talking like a one-time event where this happens and you throw the system out? Or should it be failing the threshold for X number of days? So that's 3 considerations. Yeah, there. Give you some examples here. Don't trade following any day with less than a 20-point range. And of course, just that alone would not mandate a permanent discontinuation, a permanent throwing out the system. So I think you'd need something on top of that. Abandon the system if 5 ranges in a row have been under 30 points. Okay, now you're looking at single-day ranges still, but you're making the system have to fall under that threshold for more than one time, right? Abandon the system if the 5-day average range is under 25. Okay, before it was a single range made to hit a certain qualifier more than once. Here it's a multi-day range that only has to qualify once, and for the last example, you'd have both conditions. Abandon the system if the 5-day average range is under 25. for 3 consecutive days. So, hope I've given you some food for thought there in your research. If you can run with that at all and improve on it, I'd like to know. Just give me a yo on this website, this email address, and talk to you next time.